Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Tuesday, February 22nd, 2011. Well, the grain markets started out pretty strong last night in the first trading session of the week, the overnight electronic open. Crude oil has just been going up and away ever since Sunday night when they started trading off of this Middle East unrest, geopolitical issue throughout that region, and specifically what's going on in Libya right now. Breaking news, Gaddafi came out this afternoon and said that he'd rather die a martyr than leave office out there. So that doesn't sound like the end is anywhere close to being near as far as the Libyan situation is, and that's going to continue to support crude oil prices, as they are a producer of crude, about 1.6 million barrels a day is what comes out of that country. And you got Iranian warships going through the Suez Canal right now, which is the first time in quite a little while that has occurred. And Israel is looking at that action and on their way to Syria for some demonstrations of warfare testing and drilling, if you will. Israel's looking at that as a provocation from the country of Iran. So lots of interesting news coming out of the Middle East, a lot of uprising from the citizens against their governments, and there's probably more to come. What does that do for us here in the United States? Well, crude oil, of course, is going up. Right now, crude oil in the April contract is up $5.64 at $95.35. That should be supportive to grains, right? Well, not if you want to get into the crude market and your money's tied up in grains or your money's tied up in cattle. And that's what some of the funds are being heard as doing here, getting out of the agricultural commodities and going into energies right now. Well, if that was the case, then that suggests a lot of reason as to why we saw what we saw today in the grain markets. Corn, beans, and wheat all limit down. Corn today finished at 6.79 3/4 in the March contract. Of course, that's a limit lower 30 cents. Soybeans at 12.98, limit down at 70 cents lower. And Chicago wheat 7.62 1/4. Down 60 cents, which again is the limit. Well, where was the dollar while all this was going on? Well, actually, the dollar overnight rallied pretty strong, which is what began to break these grains off after they're stronger open in the electronics. The dollar, by the time the grains were ready to open, was just about unchanged to marginally higher, just a bit. And then it actually had gone lower on the day as well. Absolutely zero play in the grain market today if you were watching the dollar. It had nothing to do with what was going on, and even the stronger crude oil price was not there to support corn. Money flow, all right? That's what's going on right now in the grain markets. It's all money flow. The funds are selling grain contracts. They're either sidelining that money or they're putting it into energies. It's plain and simple. Are they gone forever? I believe that they're not gone forever. Okay, as a matter of fact, this is an opportunity for those of us who have grain sold in the 2011 crop, even old crop that you want to re-own. This is probably a great opportunity, specifically in the corn, to get some of that re-ownership done. Over to the livestock. We saw selling in the cattle markets today as well. Fat cattle 110.10 is where they settled up in the Feb contract, down 95 cents. Feeder cattle down 87.5 today, 129.20. The feeders have been very strong here lately. Fat cattle, we had some significantly higher cash trades last week. Right now, I heard the offers this morning right at 113, 114. No current bids that I have heard of. However, we had real strong cattle trade last week. We had a cattle on feed report that came out neutral to bearish, but none of that was a surprise. We've been expecting that. We've seen that for the last 6 or 7 months. Strong cattle numbers. That's going to start to taper off. And if you watch our research meeting, which will be distributed to those of you who subscribe here this afternoon, you're going to hear Rich Nelson break that down for you. What we believe is coming down the road in the cattle, and what we need to be doing to position ourselves to protect profits that we have in those cattle right now, and the expectation of continued profit going forward for those of you who are out there looking to buy cattle at these high prices. What's going to justify the spending of the money right now at the levels that they want to get your hands on some feeders and feed them out with higher priced corn. That's all in our research. That'll be available to you this afternoon. If you have questions, you want to talk about reownership, don't forget about hedging. If you don't have anything done, nothing priced, nothing protected, you got to be doing something right now, either selling cash or talking to a broker about locking in these levels in case they do pull the rug out from underneath us. Was today a precursor? I don't know, but it was a strong pullback and it made some technical damage to the charts and the grains. If you don't have protection on, it's time to seriously start considering it. All right, call us here, 800-262-7538 is our main number here to our brokerage office. You can visit us on the website at www.allendale-inc.com. All right, there are brokers in here most all week for the evening opening anyway at 6 p.m. Central Time. If you want to call in here at night, several of us will be in here on a nightly basis now putting together marketing strategies for those who have meetings set up with us. If you want to get one of those done, call us. Feel free to call after 6. We'll be in the office 9 times out of 10. And that's all I got for you today. Very exciting day. We'll see what the overnights bring and what kind of continued trade if we're going to see them pull it back tomorrow morning as well. Thank you very much for tuning in. My name is Bob Dalton. I'll talk to you again very soon.